This is Mark Anthony with Mercury Time Price Analytics, and in this Bitcoin tutorial video, we'll be talking about the live chart that our members have access to and how to use the long cycle algo oscillators in conjunction with the shorter cycle day trading optimized algometrics that are on the left. Now, in both charts, you see the Mercury bands fixed algorithmic pivots as well as the oscillators moving through the chart. Now, um, the Mercury bands on Bitcoin are calculated on the weekend. So on Sunday, we run those algos and they stay on the chart all week. The only time we need to add additional Mercury bands during the week is if price trades down into the lowermost Mercury bands or up into the uppermost Mercury bands. Then at that point, we add additional extensions. But bear in mind when you see this level of accuracy that these Mercury bands are calculated one time on the weekend and they're good all week. Now, every system that we have, they're all designed to work together. So you're not seeing information on one chart that's going to be in conflict with the other chart. So here we have the long cycle oscillators. Here we have the day trade oscillators. Now, the day trade side, you've got two orange oscillators, which are the primary trend. And then you've got two white oscillators, which are the faster moving algorithms for folks that want to trade more frequently. Now, the metaphor is the same in both of those in that the dashed orange oscillator is a faster moving algo than the solid line orange oscillator. Same thing with the white. The dashed white oscillator is a faster cycle than the solid white oscillator. You have the same thing over here. Dashed white is faster than the solid, and dashed orange is a faster oscillator. And when we talk about faster versus slower, this is just a longer cycle, this solid orange line than the dashed one. Now, I mentioned that these systems are designed to work together. So let's take what we see here and compare it to what we see on the day trade side. And by the way, one of the advantages of having much longer cycles in terms of the time per bar, each bar over here is less than 30 minutes. Each bar over here is over 2 hours. And by using the longer cycles, it allows us to put more oscillators on there because you've got more spacing on the chart. So over here where you've got the two orange and the two white plus one additional fast algo, this purple one, well, here you've got 9. And from fastest to the slowest, you've got 1, 2, 3, 4, 5, 6, 7, 8, and 9. Now, what's really interesting, again, is how they work together. So here you have this high on September 1st, a little bit above 12,132. Happens to be a Mercury band right there. So when it came up into that level and failed, that was your first indication that there was something wrong, because these Mercury bands are very, what we call binary algorithmic levels. Price will either come up into them and repel in the other direction, or it'll come down into them like you see here and just blow right through. And it'll do that in both directions. Either when price is going up, it's either going to stop and repel, or it's going to just go right through. So as an example, if you happen to be short as price was going up into this Mercury band, well, then you have a stop reasonable distance based on your risk profile on the other side of it. So if this thing keeps going, you're out of it. So the Mercury bands are a very important function of risk management. Now, conversely, if the trade's not going against you and you're short here and it starts going the right way, well, then you use the Mercury bands as your markers or your pivots to either take incremental profits, or when you get a real nice move, if you're day trading it, take the position off entirely. But again, let's focus on this little spot right here. You come down into the Mercury band, you also have the first of the two orange trend algos, and it's right at 11,526. So let's take the day trade cycle and we'll pull the chart back. It's very interesting what you get at that same spot. Notice that here you've got the first of the orange algos, the faster of the two. Dashed orange is the faster algo, solid orange line is the slower. Same thing over here, faster, slower. Well, you come down here and you break the faster of the two orange oscillators. Over here in the day cycle, you're down here breaking the longer of the two. So you get this move down, and when you get the move back up, it comes right up into the Mercury band. And then this second push, after it comes down a little bit, this second back test higher stops exactly at the Mercury band and fails to maintain price above the white oscillator. So you see the same things on the different charts. One confirms the other. So let's go full screen on this panel. And all right, so here's the long cycle oscillators. And you can see this here is the fastest of the algos. And you notice that after it comes up and does this little bit of a topping formation, you see the algo roll over. Now, when you see these algos roll over, it's important to note when you get these crossovers. That's an indication that you're likely to see more downside. So as this is coming down, it does not pause at all on the first of the orange trend algos, comes down here, breaks this Mercury band also, and finds a low close to the purple algo. When it comes back up, notice that it fails the back test at exactly the trend oscillator that it just blew down through. So it came down through that, didn't pause, didn't respect this level at all, real hard sell-off. So as an example, if you didn't have an opportunity to get short up in here and this moved too fast, because many times as price comes down into these trend algos, it'll stop, it'll try to bounce, and then it comes through. And so it's that second entry, that second break, where it's a better short. But this happened very quickly. So after this happens, you can probably guess where the failed back test is going to come. Right here. I mean, literally almost to the tick, and that may be to the tick. And then you get another move down, a second move up, and then you get a second failure. Now, once you get this second failure, then this is an easy short at this point. But notice how it comes back up into here, and right at the spot where it fails that second back test, it's also coming back into the purple fast oscillator. This is the fastest one on here. But notice this is where it came back and failed, and you'll see this happen all the time. When you get a hard break, either up and through or down and through this fast algo, the back test will come when it confronts it again. So what you see here, you had the mirror image over here. When price goes below, comes back above, and you get this little blow-off move, here's your back test before you get the last move that couldn't extend, and then it all starts to roll over. So this time when you come down, you get a hard break of the purple algo. You come down, and once again, just like we saw here, no respect whatsoever for this trend algo. It blows right through, but then what happens on the back test? It fails at the same spot. So here's the thing. When you're trading Bitcoin, probably more than any other instrument, you need patience and planning. And what these algorithms do, because they have a substantial, quote-unquote, predictive nature or predictive character to them, you don't have to get overly aggressive. In fact, you don't want to be aggressive at all. You wait until the levels develop, because you're going to get a back test. And the back test, if you break an algorithm, the back test is most often going to be algorithmic itself. You come down here, you break. Remember, each one of these bars is over 2 hours. So you get this move down, you come back up, and it fails right there at the same spot. We'll go back over here again and look at where it failed on the day trade chart. You get this first breakdown right in here, and it comes back and it fails on the back test to the white algo. And you see right here, when it came down here into the white algo, the solid white line, it came up and it didn't want to sustain price above the dashed white line. So then it rolls over, comes down here one more time, last little failed back test before it goes down in earnest is right against the purple fast algo. You come down, you get a second one of these into the purple fast algo. You come down again. Now this time it gets above the purple algo, but it cannot get back above this one here. So the point is, you don't have to aggressively be proactive, because when you get this hard failure, you know that it's going to have a back test right into these same metrics that it failed before. And then you just get this methodical algorithmic move down, bounce here, comes back from this Mercury band to this Mercury band, comes back down again, comes up here one more time, and it fails again at the oscillator. So when price is going higher, what happens is you'll get back tests, just a mirror image of what we saw. Here we got price going higher, comes down, you get a back test at the confluence of the purple fast algo and this orange one. So you come up here, you come back down, you go higher again. You come back down, you get support at the confluence of the purple oscillator and this Mercury band right here. Now, the reason you got this fast move up here is because what you had here was a bear trap. This didn't do anything wrong. It came down here at a little bit deeper retracement than you had right here, but all these algos are still trending up. I mean, look at how aggressively these white algos are trending up. So when you get this move back to an aggressively upsloping algo oscillator, those are pullbacks you buy. Again, the trend is determined by the algo oscillators. So when you got this move down, this move back up, and then this little move down that just made a lower low here, it didn't do anything wrong. It came right back to this aggressively upsloping oscillator. And then after you get this bear trap, which holds at the trend algo, at the Mercury band, and at the strongly upsloping oscillator, well, then you get these fast moves. You get fast moves higher after you get the bear trap, which is right here, and that works in both directions. You come here again, you have a nice little pullback. It stops once again at the upsloping oscillator. You get to move higher. Now this is where, I mean, if you're playing it long, this is likely where you want to get out. You start seeing this whole structure roll over. You did get another strong move higher, but having traded for over 40 years, I can tell you that, to use a football metaphor, you make money moving the football between the 20-yard lines. If you try and catch every little bit of every move, then you start giving back your profit. So unless you're very aggressive, you start coming down here, you're out of your long position, or you're trimming it significantly and just keeping a runner, one little piece to see if you get one of these. But ultimately, even though you had a deep pullback here, you still didn't do anything wrong, because all it did is come down to the trend algo. So the orange oscillators are the trend algos, and then the two white ones are the faster moving ones. So as long as this came down here and it held at the trend algo, the uptrend is still intact, and you have one heck of a bear trap here. And when it comes down to here and holds, where do you get back long if you want to trade it aggressively? When you get price acceptance right back above the oscillator. So if you look closely, you can see what happens here. You get this move on this green extension bar above the oscillator, and you just get the tiniest little check back right into here, into it just nestles into the white oscillator, and then boom, then you're gone again. And you repeat this over and over throughout the chart. As long as the uptrend is intact, these pullbacks are buyable depending upon your risk profile and how aggressive you want to get. And then what made this one different is this was the one time in this whole structure that the purple algo crossed over. So if you move it back here, did we get a crossover before? No, we didn't. So you got the bullish crossover, the purple algo through the two white ones here. No cross back down and through here. Actually, here you did. It crossed through the dashed white one, but not the slower moving solid white one. And so that told you once you get this, You get the move back up, price acceptance above above both of the white ones after you've come down into here, then you're going to get a nasty move. But when you start seeing this type of looping action in the purple algo, then you're getting real close to a high. And then that's what gives us this move down right here. So the whole point is, by having the long cycle algos on the same live chart, and the live chart is what our members see. So when they're trading in the evening or during the day session, you've got this live chart moving in real time, no software to buy, no software to download. And it works exceptionally well when you can see the faster metrics, the day trade metrics on one side and the longer on the other side. And so regardless of what type of trader you are, it helps to see the confirmation of the other cycle. So if you're a more frequent, more aggressive trader, it's very important to see what's happening on these longer cycles. And if you're a more selective trader and you're looking for these bigger moves and you want to trade these longer time cycles, well, this chart you can swing trade off of, but yet you still have the confirmation of the shorter cycles to help you with trade management and where to take partial profits. So in effect, what you've got is the day trading cycle here, the longer swing trading cycle here, but you use the information on both of them to help make your decisions. If you are a current member of our platform and you have any questions, please let me know. If you're watching this video on YouTube or repost it on social media and you'd like to find out more about our systems, you can find them at mercurysignals.com, and that's Mercury Signals with an S. Thank you so much for taking the time to watch this video. As always, and most importantly, God bless you, God bless your family, and we hope to see you again soon.